Okay, this is the daily money-making setups on the S&P E-mini as seen with the ProcessTrading.com right edge trading system using the 1500 tick bar chart. So I'm going to try and make this video as brief as I can. And of those of you not familiar with the ProcessTrading.com right edge trading system and the specific leading non-correlated indicators, including these price cycle bars, which I'm going to talk about in a minute, if you go over to ProcessTrading.com, it will explain the whole system. And there's plenty of blogs and videos over there that can help understand how it all fits together and why it's a complete system for reading price action, price movement. And the basic thing about it is it tries to delineate for you exactly what is happening and when it's happening, so you can make good trading decisions in a timely manner. So those of you familiar with it, let me explain a little bit where we're going with this. Right at this point of the day here, and I'm getting to the trades, because after I get through analyzing the day from about 10 o'clock on, then I want to go back and show you something very interesting and very specific, and probably contrary to the way that you're thinking about a specific technical analysis understanding that's been propagated for a long time. So at any rate, right here you have the pro cycle bars. That's these white bars. Up until this point, price has been moving fairly laterally, and you see a yellow VWAP line here. Well, the VWAP turns gray here, and you see this price cycle bar right here drop below the support line and below the stop exit line. The conjunction of these two bars and that movement right there, that tells you that price is going to descend. Now, price does descend, and we see, because this is selling at the top. We know that because of the configuration and the system. And as I say, if you want to understand that more, you can do it over at ProcessTrading.com for this video anyway. And so now we have selling, and we have continued selling, and we have continued selling till we get to this point right here. This is your classic buying at the bottom. So we knew that this was buying at the bottom right here. Now, I'm not going to get into the specific trade management techniques, but in the process trading, you have trade management techniques that you can take trend trades, and that uses this VWAP line, which is gray or yellow, and it has a specific trade management technique with it. You can take contrarian trades, which are when price gets to these contrarian bands. That's the contrarian band for going short. That's the contrarian band for going long. And so, excuse me, you can take contrarian trades, or you can take discretionary trades. So those are the three types of trades you can take. And they all have trade management techniques associated with them. Well, this is selling at the bottom. This then is going to be a discretionary trade. So let's say that you appropriately identify that trade and you get into that trade. The next thing you want to know is, well, how do I manage that trade? Well, you do that as well with the price cycle bars and the stop exit line and all the other indicators. But in particular, you want to be able to interpret what is happening. Again, these are price cycle bars. It doesn't matter who they are, smart money, big money, professionals. It doesn't matter. What matters is that they are happening, what is happening, and when it's happening. So you know what is happening because they're taking price down, or they're following price down. And you know what is happening right here, that all this is selling. And these two bars right here represent climax buying at the bottom. So then you got into that trade with the appropriate trade management technique, and you follow it up. Now you have two bars right here, two price cycle bars right here. Both of those fall below the stop exit line. That's this dashed line right here. In normal understanding, you would say, well, that's where I exit. But you're not going to exit here because you're looking at the complete system. When you look at this price cycle bar and this price cycle bar, then you look down at the energy. And remember, the energy is the internal energy that volume is causing with price. Now, you see this come below that stop exit line and this bar come below the stop exit line. But when you get down to the energy indicator, the internal energy, you don't see any supply. The green is demand, the red is supply. Look at the length of this bar right here, and you can see it still didn't bring in any supply, as opposed to here's a very short bar over here, and it brought in red supply. So now you know that instead of showing weakness and supply, sure, yes, it shows the weakness in demand right at that point, but really what it's showing is that these are pullback areas. So price pullback. This actually is the buying up of these bars right here, and this is the buying up of these bars right here. These are just pullbacks. You don't see any demand coming in right here. So that's how these indicators work together to form a system. So let's say that you interpreted that correctly and you knew to stay in, because look what you did. You got in here appropriately. Now, if you got out here, yes, you get 1, 2, 3 points, but you could have wrote it all the way up through the day, because the day trended up, and you could have had, probably 3 or 4 times the amount of points that you took down here, and then again, you would then have to go and get another trade, which you can with the system here, but interpreting it correctly would keep you in the trade here and not out of the trade when you're looking at the cycle bar. So now the trade keeps going up. And here may be another price cycle bar. This cycle bar can represent selling at the top because it got all the way up to the support line. And this is where some of the contingent is going to take their profits. So it's taking the profits right here because at support and resistance line, there's a period there where you're not really sure just by looking at price alone whether that's going to continue down or keep going upward. So this can be selling at the top, but you're not going to get out of it again because you're looking down at the energy indicator. You don't see any supply. As a matter of fact, the weakness bars in the demand side of the energy are quite substantial. There's not weakness. It's not like over here where you see weakness and they're trailing off and they get clear over here to no demand. No, there's still demand there. It's just weak. Demand came up to here. It now is taking a breather. That is this weakness right here where there's a weakness in demand, catches its breath, and then a new contingent of buyers comes in with these green demand bars to take it higher. So you continue to follow it, and right here, this is for sure selling at the top. But by the same token, it's selling at the top, but look at its position. It's right in the middle between the contraband line, which we know is where when price hits that or goes beyond it, that's a regression to the mean point. And that this is the regression to the mean line. The VWAP serves as that as well. And this is right in the middle right there. So even though this is definitely selling at the top, you still have all this energy, and that's this energy right here. You still have all this residual energy, and the residual buyers not buying into the story that that's the top, and taking price up until you get over here. So this is selling at the top. This is selling at the top. And this is your classical selling at the top. This is what you were waiting for. This selling at the top over here did not take out all the energy in the demand side of the equation. So it came down here, and then that last flurry of demand came in, and here's selling at the top, and you see it got to a better proximity. Clearly, we'd like to see it even closer, but it got to a better proximity to the contrarian band up here. So you know for a fact that this is selling at the top. You know it's a good trade because here was the initial selling at the top, and here was the exhaustion of the rest of the energy in that move up, and here's the selling at the top. Then this right here represented buying at the bottom. So now, if we looked at it as far as cycles, because we've been talking about that lately. So if you look at it as cycles, this buying cycle, as far as the energy, started right here, went up, and it doesn't end till over here. So that's quite a long cycle. And then you had a small supply side of the cycle. So that's what that cycle would look like. It would just go over there, curl down, come back up, and a new cycle starts. So this is one half of the cycle, and this little bit here is the other half of the cycle. That's what the cycle would look like from the Intergy standpoint. Also, when you're looking at Intergy, we knew that trends were coming because here's a trend alert dot and here's a trend alert dot. Okay, from the price bar side of the equation, we knew that this was selling at the top. We know this is buying at the bottom. So price-wise, this is the beginning of the cycle, which goes all the way up over to here. And this is where in a cycle is just buy low, sell high, buy low. That's one, whichever combination of those you work with, that is the cycle. So here's the buy low and the sell high. So the cycle went from there down to here, and now's where another cycle, an up cycle, begins, because this is buying at the bottom. Now, if you look at those cycles from a cinnamon oscillator standpoint, I'll do the other two indicators very quickly here. From a cinnamon oscillator standpoint, the up cycle started right here, where momentum crossed the cinnamon line. And now we know that cycle, even though momentum kind of whipsawed around the cinnamon line, we know, because looking at the energy, that the cycle went clear over and ended right here. So as far as the cinnamon oscillator, that is the up part of the cycle from there to there. And this part here is the down part of the cycle. So that cycle on the energy went like that. Okay. Now from the short-term trend line, the cycle is much different. So the down cycle starts way over here. We can see it as there's little volatility, because we see that the channel of the oscillator is compressed, and the short-term trend line is cutting through the pullback line here and going below the lower bound. This is the beginning of the down cycle as far as the short-term trend oscillator is concerned. And you can see that occurs, and then right at this point right here, the short-term trend line comes up above the lower bound and actually goes up to the pullback line. And so that then is that part of the cycle. This is the down part. This is the up part of the cycle here. And we can see that the short-term trend line turned green here. Although the most important points of the short-term trend line is its structure, its position within the oscillator, and the slope of it. So from a cycle standpoint then, from this point here, and we see it coming down to here, sloping up, again, hitting the bottom, going past the midpoint, and now sloping up. And we know that when you have a short-term trend oscillator that starts to slope up, that's very indicative of a strong trend, then that is the up part of the cycle, okay? And then this little bit here is the down part of the cycle. So those were your trade setups for today, and those were how to manage the trade, and it is what the cycle looked like and how the indicators worked as a system. But here's something that I talked with somebody else today, and I wanted to show you this because it's a very much different interpretation, I believe, than you're accustomed to, and I think it will help your trading a lot because you can see how it fits in and works with the system, how it all makes it logical, just like all this part of the system that we've discussed so far. It's just logic, it's just common sense, it's just simplicity, it's just reading what's happening and when it's happening. So let's continue to do that. And to do that, I'm going to go back to the first part of the day here. Okay, so this is when we noticed that a trend to the downside was started. We noticed that right here. Well, overnight, from 2 o'clock in the morning until this period over here, until about 10 o'clock this morning. So from 2 o'clock last night, 10 o'clock this morning, just visually, you can see prices just moving laterally right through the VWAP. Yeah, it does go a little above it, a little below it, etc. But basically, you can just visually see that it's moving laterally, or horizontally. You can see a price cycle bar right here, right on the VWAP. One right here, right on the VWAP. One below, one above, one below, but one right on the VWAP, right on the VWAP. Here's one at the VWAP, one at the VWAP, one at the VWAP. Here's another one right at the VWAP. And it's not until over here that this one goes below the VWAP and below the stop exit line, and it goes below the support of the VWAP. So we knew for sure that this then was selling at the high. Now, there's a couple of things I wanted to mention here, and it is this. There's only two things that happen to price in trading. No matter what they say, no matter what anybody tells you, there's only two things that can happen. You know how they always tell you that, three things can happen. They say price can move laterally, it can move horizontally, or it can go up or go down. Well, let's put that in different terms here. Price can go up or price can go down. We're going to call that a cycle. So there's only two things that can happen. Price is either going to cycle from low to high or high to low. Those halves make a cycle. So price can only cycle or it can accumulate. What you see from 2 o'clock last night until 10 o'clock this morning, that's accumulation taking place. And we know that's accumulation taking place because of all these price bars just right on top of the support and resistance area. Now, that's an accumulation taking place, and we don't know. We know one thing for sure. When it breaks, it's going to break to the upside or it's going to break to the downside. We didn't know which until it hit this area right here. Then we knew for sure that was selling at the top. But what I want to talk about is the definition of accumulation. In classical technical analysis, when they talk about accumulation, they'll talk about a situation. Let me move this over here. They'll talk about a situation maybe such as this, and they'll say that the price is being accumulated, more shares, more buyers, there's more accumulation taking place, and then it'll go to a high, and then they'll say distribution is coming in. Well, that is not the accumulation that I'm talking about, and it's not the accumulation the system's talking about, and it's not the accumulation that can help you in your decision making, really. This accumulation here is everybody and their uncle. It could be anybody. And yes, it is accumulating positions on the way up. But this is not. This is really how process trading considers accumulation. And there's only two things that can happen. Again, you're either going to have accumulation or you're going to have a cycle. Now, you can have accumulation and then a down part of the cycle where it breaks down like it did right here, and then it can start accumulating again and then go up or go down again. So you can have multiple accumulation points, but there's only two things that can happen. It's either accumulating or it's cycling. This accumulation here is they're not accumulating prices at specific areas to add to their portfolio, so to speak. This is these pro cycle bars, and that was a misnomer. They're just cycle bars. It doesn't matter who they are. And these cycle bars, they are accumulating orders. They're either accumulating buy orders or they're accumulating sell orders. We don't know which, but we know what accumulation looks like. That's what it looks like. And we do know what they are doing. And because we see it going horizontally here, we know when they're doing it, and we know when it stops. Right here, after all this accumulation, now we know that they're selling at the top. Okay, so that's accumulation. That understanding that type of accumulation and understanding that that's all that can happen is that there's either accumulation of orders, whether they're buy or sell, and then they're cycling of buy low, sell high, or vice versa. So there's either a cycle or accumulation. That's all there is. And we just have to know what is happening and when it's happening. Are we in a cycle? Are we in accumulation? Are we selling high? Are we buying low? Which is it? So putting these all together will give you a good reason to understand what price is doing, and then look at the other indicators, and you will know when you're in a cycle. At this point here, as we pointed out, these are pullbacks. There was no indication, there's no supply here that this cycle is over. And as a matter of fact, you can see by the energy here, this cycle went from here clear over to here. This was a long up cycle. If you know you're in an up cycle, you want to stay with the up cycle. And as well, you have a trending dot right here that tells you that you're in a trend. Well, that's not a downtrend. You're not in a downtrend. You're in an uptrend. So at any rate, I wanted to show you how the day looked, and I wanted to emphasize that difference in the interpretation of accumulation. So I hope that helps. And If you have any comments or questions about it, you can go over to processtrading.com. At the bottom, there's a contact form. Just leave your email and a question or a comment, and we'll get back to you. And if you want to get these videos, I post them every day out on the website, processtrading.com. And if you want to come directly, hit the subscribe button. And until the next video, I hope all your trading goes well, and I hope this helped.